Most traders look at the market and believe price moves randomly. They think the market is emotional. They think price has no plan. But what you're about to see proves the opposite. On this chart, nothing is random. Every move has a purpose. Every push exists for a reason. The market moves to take liquidity, to trap impatient traders, and to reward only those who understand smart money logic. In this video, I will break this chart down step by step, starting from the left side until the final target is reached. If your goal is to stop guessing and start understanding price, make sure you subscribe to the channel. This channel is about education, not hype. Smart money explained clearly and practically. Now let's begin from the left side of the chart. The first thing I always analyze is market structure. Before entries, before targets, before stop loss. Structure comes first. On the left side, price is forming higher highs and higher lows. This tells us one thing clearly. The market is bullish. Structure gives direction, not timing. And this is where many traders fail. They search for entries before they understand direction. Smart money never does that. Now watch carefully what happens next. Price pushes down aggressively and takes out these previous lows. To most traders, this looks bearish, but this is not weakness. This is a liquidity sweep. Below these lows, sell-side liquidity exists, stop losses, pending orders. Fear. Smart money needs liquidity to enter the market, so price moves down not to continue lower, but to collect orders. This move traps sellers, triggers stops, and builds long positions for institutions. Liquidity is the fuel of the market. Without it, price cannot move. Once liquidity is taken, notice the reaction. Price moves strongly upward and breaks the previous high. This is a clear break of structure. Break of structure confirms that buyers are now in control. But remember this carefully, like a break of structure is not an entry. Smart money never chases price. After expansion, the market must rebalance. And this leads us to the next key concept. This zone here is not random. This is a point of interest. It's the last area where price consolidated before the strong bullish move. Institutions don't enter with one single order. They scale in. This area contains unfilled orders. When price returns here, I do not enter immediately. I observe. A point of interest is not an entry. It's a location where I expect a reaction. As price approaches this zone, something important happens. The market creates small bullish moves. These moves look convincing. They create confidence. They create FOMO. This is inducement. Inducement exists to trap early buyers. Retail traders buy here, placing their stop losses below. Smart money uses these stops as liquidity. This is one of the biggest reasons why traders lose consistently. They enter too early. Patience is not optional. After inducement is complete, price finally pushes deeper into the point of interest. Now my focus shifts from analysis to execution. I'm not guessing. I'm not hoping. I wait for confirmation that selling pressure is weakening and buyers are stepping back in. The entry is taken after inducement inside the point of interest. Risk is defined before the trade is placed. The stop loss is placed below the point of interest. If price breaks and holds below this level, my idea is invalid. I exit. No emotions, no arguments. This is why stop loss is essential. It protects capital and protects psychology. Now let's talk about the target. Above price, we clearly see buy-side liquidity, equal highs, resting orders, breakout traders. Markets move from liquidity to liquidity, so the target is logical, not random. Risk is controlled, reward is planned. Once price moves in my direction, I let the trade work. I don't interfere. I don't manage emotionally. One trade does not matter, consistency does. From left to right, this entire move followed smart money logic. Structure, liquidity, expansion, retracement, execution. Nothing here was random. If this breakdown helped you see the market more clearly, subscribe to the channel. In the next video, we will go deeper into execution and refinement. Trade with patience, protect your capital, and let the market do the work.